We're here on the Euro New Zealand. This is the 5-minute chart. You can see there's a head and shoulders. I've actually used this as an entry. It is into the entry of this very big triangle. Now, first of all, this is a shout out to Marcus Webber. Marcus, well done for mentioning this. I personally missed this. I was needing a break of the trend line of this lower portion just here. However, I can look for entry reasons when we come up to retest the trend line. For instance, if we put a double top in, that's and we break to the downside, then that's showing that there's a good level of structure there for me to get involved with. And it's the same with a reversal pattern, something like a head and shoulders. So he shouted this out. I went and re-looked at it, and then I got involved. So Marcus, if it goes on to win, thank you. If it doesn't, shame on you. So let's just delete everything off, and as usual do the high time frame analysis, because this is quite a big pattern on the Euro New Zealand. We need to look at the high time frame here. So what we did is we actually had a break above this structure level, then we pulled back, we had a bit of a retracement, and what we're doing now is we're coming back down here to, well, we're currently retesting the structure zone, so we'll either see a pop to the upside or a continuation to the downside. Let's go to the 240 and take a look at this. Okay, on the 240, slightly different story. Up here we have triple tested this area, indication that price could not break through it, and so we've broken to the downside. So with 3 tests in that area and a break the other way, indicating here that we're potentially running out of bullish momentum. And to the downside we had this rally, a pullback, and we're down here again. Let's go to the 60, which is where we can see this triangle. Now concern here is that we haven't violated structure, and I'll tell you what I mean in just a moment. So we've got quite a directional pole, and we've got this. You can actually draw this a few different ways. I'm personally drawing it this way because that means we have a touch, and a touch just here, and along the bottom touch, 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 touch. And so you can see the number of times that we've tested this lower level, but each and every time we are putting in lower highs, lower high, lower high, lower high. And so if we then drop down to the 15, you can actually see this a little clearer. So what we need to do is breach this lower structure level. So I was initially waiting for a break of that area, a pullback, and then potentially a continuation. But because of the head and shoulders, then I've been able to use that as an entry, and I will, since we've now come down and retested those lows, reduce down the risk on this trade. So just let me bring back on the orders. So in actual fact, I'm not going to be able to reduce down the risk on this trade because my stop has gone above this structure shelf here. So I have got 21 pips of risk. The reward on this trade is 74. I am just going to go back out to the 60-minute time frame, and I'm going to put a fib on. I would be playing for a 127 fib extension, hoping that we can get the breakout. There we go. You can see I'm 5 pips above that number. Let me just reposition that. There we go, 5 pips above there. Just make sure my fibs are in the right place. That's correct, that's correct. There we go. Okay, so it's actually about 76 pips of reward, and we're simply just going to hold this. There's nothing else to do other than just wait. The head and shoulders has now played out. I'm just going to monitor to see if we can get the breakout here and at least get a break below, close below. We're back, as you can see, 33 pips up now. Not too important that, because obviously we've not hit targets or stops, but this is. Spoke about this structure level here. We have now broken and closed below it, and if I go out to the 60, you can see that this blue line here was the low of the structure level, and we now have a break below, close below. So probability here of continuing down to hit targets has just increased quite significantly. Back for another update, and we did see a little bit of a retracement here, and then we're working our way back down again. Just look at the last candle, big inverted hammer there. Sign here that we are very shortly going to drop down towards our targets. Let's take a look at the 60. You can see here on the 60 we had a little bit of a pullback, very, very shallow, followed by a lower low, lower close. So I am expecting this next hourly candle to rally down. Whether or not we can get out of this market before the market closes, I don't know. Really would not like to hold the Euro New Zealand over the weekend. The fees are very expensive. It would just be better if we could get out of this market rather than holding the trade over the weekend. We're back on the Euro New Zealand. It is Sunday, 9:10. The market doesn't actually open till 10 o'clock for me, but I do get the actual figures update, but not the actual candlestick. So currently 7-8 pips down here. Sorry, only 7 or 8 pips up here. Now, before the market closed on Sunday, because this is the Euro New Zealand, I was saying that I really wanted to be out this market because the Euro New Zealand is one of those unpredictable pairs that does tend to gap a little bit more than the others, and the fees are very expensive, and it can you have a higher probability of being stopped out in these circumstances. So what I do is I have to manage the trade through the weekend. So what I did with this is quite simply I had my stop further back and I had my target further away from my target as well. So my stop at the moment I've got up the top here, and my target should have been here, but I've got it down here, and that's simply because of the fees. In fact, if you just look now, it's just updated to plus 27. I was actually at just 3 pips earlier on. Now when the market closed I was at 40, and still this is still a high probability trade, but because we've gapped, and we've probably gapped up here, and then we're just starting to work our way down, and depending what the fees are with the broker and things. So I think it's just a good example of how to maybe manage those trades through the weekend, particularly those that are a bit more susceptible to gapping. The way I think about it is this: if the market was to gap up here, my stop would not have been hit, but the spread would get me. So if I have my stop, doesn't matter if I have it up here, it's still only going to gap to here. Now if the market was to gap all the way up here, well, I still end up losing the pips because my stop was here. So having your stop back at the weekend for me is actually safer than just leaving it in the same position, because you then have the chance to wait for the market to settle down within a couple of hours or so. Maybe exit the trade straight away if it's completely violated structure, or if it's held structure, you maybe want to just then hold it, because I don't know if anybody works gaps there, but for me, whenever I see these gaps, there's a high probability that they go and get filled most of the time straight away. So anyway, that's how I've managed the trade, and this is why I'm still in this. And come 10 and just afterwards, I'll then move my target back into position once the fees have gone back down to some sort of normality. We're back, and as you can see, in the night we have now rallied down to hit those targets for plus 76 pips. What a fantastic way to start Monday morning. It is only 7:10, just to wake up and know that for this week you're up 77 pips. It's a lovely feeling. There is one thing I just want to run through on this trade, and that is that we could have gone for extended targets here. I'll just go down to the daily. Nope, wasn't the daily. Let's go to the 240. You can see we've passed that 127, and that is that we could potentially come down to this structure area here. Now I was in a bit of a rush to implement this trade because I'd almost missed it. As mentioned, Marcus was the first one that spotted it, and when I entered, I only entered in one position, and because I use strategies, I can't adjust that strategy afterwards. So This was just a one target winner, but you do have structure down there. I bet you've got a 1618 down there as well. Let's have a look. Yep, 1618 down there as well. So would have been nice if I did put a second position on here, because I would have been playing for that secondary position. And we have an AB equals CD pattern down there as well. But no matter which way you look at it, this was a beautiful triangle, a brilliant example of how we didn't break structure and how we used the trend line and used a classic reversal pattern, a head and shoulders, to get a more conservative entry. Head and shoulders is a reversal pattern, and we were due to see a big breakout due to the fact that we had tested this lower structure level, and we did. We got that decent breakout. So fantastic trade, triangle, head and shoulders, plus 77.